Give yourself a raise this year. I'm going to show you how to give yourself a raise of at least $3,500 right now, just by recording the things you're already doing and following the tax laws that have been in place for years. Who am I? My name is Sean Deegan. I work as a search and rescue deputy, and I'm also a chief petty officer in the United States Navy. I have 2 kids, Michael and Lauren, and I'm an entrepreneur. Some facts I want to share with you up front. Did you know that 30 to 40% of your income goes to income tax? That's more than your housing, food, transportation, and health care. Some deductions that people are familiar with are their spouse, kids, and a home. But with those come pretty big expenses. Your children require lots of money to take care of and support, and then send to school. Your home costs you lots of money in the mortgage or rent, plus utilities that you pay. It's been said there are 2 sets of taxes, one for the wealthy and one for the poor. But what I've discovered and what I'm going to share with you proves that's not the case. There are tax laws set up for business owners, or the wealthy, and everybody else, the poor, just regular working people. I'm going to show you that you can use those same tax benefits of the wealthy to build your home-based business and keep more of what. Plain and simple, home-based business deductions are how successful people have been keeping more money than anybody else. Having your own home-based business allows you to deduct a percentage of your mortgage or rent as well as the utilities, most of your mileage and expenses on your car, and travel and entertainment. This can equate to about $300 to $500 per month, or about $3,500 to $5,000 per year. And that doesn't include what you could make from your own business. So how does all this work? Basically by allowing you to deduct your expenses before you pay your taxes. So if you look at the table, a normal employee on the left with an income of $50,000 pays 35% tax on that, with a net income of about $32,500. I'm using $10,000 as an example for expenses. After all that, you're left with $22,500. Now look at the column on the right. A business owner. Same income of $50,000, except now you get to take your expenses out before you pay taxes. So your taxable income is only $40,000. 35% on that is $14,000. The difference that you're left with is $3,500. So where do you get these? Well, let's start with your mortgage or rent. If you set up an area in your house for your home-based business, you take whatever that percentage is of that office of the total square footage, and that becomes your percentage for your deduction. In other words, if you spend $1,200 a month on rent or mortgage, and 10% of the total square footage of your house is set up for your business, you can deduct $120 a month, plus 10% of all the utilities that you pay. Your phone, your gas, your electric, your water, maid service, internet, landscaping, and deducting your mileage. The tax law allows you to save $1 for every 2 miles that you drive. A trip to the grocery store, bank, or mall can be business deductions. If you need to run to the store to purchase something for your business, and while you're there, you conduct other shopping or other business, that's still business mileage. Even if you're visiting friends and family, you can consider that business mileage. How? Well, plan ahead. Tell them, hey, I want to talk to you about a business that I'm doing. And when you get there, ask them, do you know anybody that's interested in losing weight or interested in making money? That's it. You've asked for referrals, and that's a business trip. Doesn't matter what you spend the next couple hours doing. You've already recorded it. Travel and entertainment. Probably one of the biggest deductions that's overlooked. If you show your opportunity to somebody or meet with them about your business or about prospects, it's considered business travel. So who are your prospects? They're your friends, your family, and your family's friends. Any marketing business tells you that you need to talk to your friends. Get them excited about and involved in what you're doing. trip across country to visit your aunt, your brother, your sister, your daughter in college can be business travel. And don't forget about the entertainment. Entertainment is the fun. If you're entertaining somebody that's interested in your business, you can deduct 50% of your cost and theirs. So you want to take your brother to a baseball game, and within 24 hours before or after the game you discuss your business or talk to them about prospects? Then that's deductible. There are tons of other deductions. Basically anything you could put in your business office is deductible. So your computers, your printers, your desk, your iPad are all deductions. You can give gifts to people, up to $25 every time you give somebody a gift, if it's from your business. You can even hire your own kids and pay them before you pay taxes on that money. Some people have even written off the equivalent of their kids' college education. Also, if your business requires you to maintain a certain volume to stay current as a business owner, you can deduct the cost of those products to keep you in that status, even if you use those products yourself. So what are the rules and how can you do this? The IRS requires a few things. One of them is you run it like a business. That means on a regular and consistent basis, you need to work on your business, about 3 or 4 hours a week. You also need to keep records. It's super easy. You don't need a drawer full of receipts. There are tons of apps and applications and software out there to help you do this. And the last thing is you need to have the intent of making a profit. You don't need to make a profit. The rules just state you need to have the intent to make a profit. So what do you do now? I suggest you go out and find a home-based business that you like. I'm in one. It's about health and nutrition. I love it. I also suggest you go out and you read more about the tax benefits. IRS Publication 463 is where you would go. I know there's over 75 possible deductions listed there that you can take, so I've only scratched the surface. The biggest thing is start doing something now. Put the money back in your pocket. Give yourself the raise now. Don't wait. If you have any questions, shoot me an email or check out my website listed below. Thank you.